Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, and looking at how institutions and hedge funds, so the biggest speculators in the market, are moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly demand and support area. In fact, from here, all this previous rejection to the upside was created. Again here, the market tested its zone and rejected it to the upside. Again here, and at the moment we can see how just last month we had another test of this quite strong support zone. The market started rejecting it to the upside, and from here we could expect more bullish continuation to be created away from this level, as already happened in the past every time that the market in these occasions tested this exact same level. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we must notice how when it comes to the structure of this market, we just had a clear shift from a bearish market to a bullish market. In fact, first we were creating lower lows and lower highs. Then we had this horizontal accumulation and the market shifted to creating higher highs and higher lows. In fact, we can see how we had the first higher high here, so higher than the previous one here, and we had the higher low here, higher than the previous one. Now we also got a higher high. So the next logical step for this market would be to create a higher low and then a new higher high. So everything also from a weekly perspective when it comes to the structure looks quite bullish. If we look at the pattern that the market has been creating, we can also notice how we have a clear impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse candle. And if we do that, we can see how we have the 0.32 50% and 0.618 Fibonacci retracements all lining up exactly inside of this area that we could in fact expect this market to reject to the upside, because here we actually have confluence of support because we have both those Fibonacci levels, and if we extend the level to the left, we can see that this is also the zone inside of which we have the previous weekly resistance turn support. So since we have both the Fibonacci's and the structure, we actually have confluence of support inside of this area from which we could in fact expect a potential rejection to the upside. Going down on the daily time frame, what do we see? Well, from a daily perspective, here things get quite interesting. Now, I did speak about GBPUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside and the creation of a new daily higher high. And in fact, that is exactly what the market gave us. Then again, after this impulse and correction from here, I made a full breakdown explaining all the reasons for which we could expect this move higher. And again, the market gave us the move. And then we had the creation of this M pattern and explained all the reasons for which we could expect a completion of the M pattern at the neckline, which is in fact exactly what the market did here with the test of the previous support turn resistance, aka the neckline of the M pattern itself. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, at the moment, from a daily standpoint, we have to identify that the market is actually trapped in structure. In fact, we have previous daily support turn resistance at this level. However, at the same time, we also have previous support, which is still acting as support, which is this one here, which is still acting as support here at this level here. So until the market will remain in between these two levels, we could expect more horizontal price action to be developed inside of this range. However, we have to keep in mind that as we have already checked the monthly and weekly timeframes, both these timeframes are bullish. And the best probabilities in the market come when all the directional timeframes are showing the same direction. Now, that would only happen if we get a break from a daily perspective above this resistance. Because if the market remains in the range or if it breaks below, we really don't have anything interesting because we have already seen that the monthly and weekly are actually bullish. So if this will be the case, there is nothing interesting. However, if we get a break above resistance, that is where things get interesting, because after the break, this previous resistance would be turned support here. So after the break, on the retest of the previous resistance turned support, how I could be approaching a potential move higher. Now, before I speak about that, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing. Now, if we check the data for the GBP, we can see how with the last reports, net positions have been massively increased. We went, in fact, from having a minus 27.7k net positioning, in which we had way more shorts than longs from an institutional perspective, with 80,500 shorts compared to only 52,000 longs, all the way up to now having a positive net positioning of plus 11.6k net positions, with the complete opposite situation, so way more longs than shorts. We have in fact 66.3k longs compared to only 54.6k shorts. And we had 14,400 shorts closed with the last report and 5,000 longs getting added. Now, this makes the GBP quite strong, meaning that it actually makes GBP USD quite strong, because keep in mind that all currencies on the spot are traded against the USD. So if we are checking the data for the GBP, we are actually already checking GBP USD. So moving back to the technical side of this market, to recap, until the market will remain in between this range or break below, nothing interesting. However, if we get the break on the retest, the way in which I could be approaching a potential move higher is, as usual, being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, potentially what I could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to me one of my valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.